What if I told you that investment banking is one of the most profit-making sectors in the financial sector? In 2018, investment banks generated a revenue of $39 billion in the US alone. Despite this, few individuals understand what these banks do. This high-stake industry has managed to baffle hundreds of people like you and even the banking professionals with its high earnings and complexity. Now, high earnings do not come easy. Investment banking is not all about nightclubs and champagne. This job is extremely stressful, and some high-profile investment bankers have to work for more than 100 hours a week. So, what exactly is investment banking? Why is it such a lucrative career option? And how are investment banks different from commercial banks? Hey, what's up everybody? This is Unravel, where knowledge is power. Before we get into explaining and understanding how investment banking works, let's go back in time and see how it all began in the first place. Back in the early 19th century, commercial banks in the US performed all the functions we associate with investment banks today. But this scenario changed during the Civil War. The tale of investment banking begins with Philadelphia financier Jay Cooke. So, it was Jay Cooke who established the first ever American investment bank in 1861 to fund the federal government's war efforts. And this way, the US government became one of the first clients to adopt investment banking. Back then, America's economy was rapidly growing and funding was required to complete infrastructural projects. So, the American government used to issue bonds to raise money for the same. For those who don't understand, bonds are issued between the lenders and borrowers, which are typically used to finance expensive projects. Investment banks used to make their profit by buying these government bonds and selling them to private investors for some margin. Today, investment banks more or less perform the same functions, but there are different parties involved. Well, the business model is much similar than you think. You might have heard the term underwriting before. And underwriting is exactly what investment banks do. In layman's language, investment banks purchase assets that hold monetary value, otherwise known as securities, and then sell them to third parties for a fee. Now, you might think, why don't clients and investors just save their money and make the deals themselves? The answer that investment bankers acting as a middleman between clients and investors are the risk-bearing party. They're responsible for the finding investors and distributing securities. If they fail to do so, they have to keep some securities themselves. This way, the client does not have to bear any loss. It's all on investment bankers. A similar method is used by commercial banks, but the only difference is commercial banks take risks on a smaller scale, and there are different parties involved. They deal with individuals like us and small to mid-sized companies by giving out loans like individual mortgages and small business loans. They make their profit through interest charged by them on these loans. Since a smaller chunk of money is involved and the risk factor is very much calculated, the interest is also low comparatively. On the other hand, investment bankers deal with huge companies and high-risk startups by acting as a bridge between them and the investors. They earn huge amounts of fees by doing this, but there's a much higher risk involved due to its uncertainty. These days, investment banking is seen as a very lucrative job, but it's not always been like this. To be honest, investment banking has had some bad history. So, let's go back in time and understand why investment banking has had a bad reputation. Does the subprime mortgage crisis of 2008 ring a bell? It was one of the worst financial disasters in history. It all started when the Federal Reserve increased the bank's liquidity by lowering the federal interest rate in 2001, which enabled the US banks to give out more loans. Banking standards were violated and banks started to give out loans to anyone without considering their employment status and credibility. These types of loans is what we specifically call subprime mortgage. In simple language, you can call them less desirable loans. Now, to make room for new loans, banks sold their old loans to investment banks. And what investment banks did was repackaged those subprime loans and sold them on to investors without disclosing how insecure those loans were. At that point, no one seemed to care. It was one big party. Everyone was having the time of their lives. Borrowers were buying homes, investors earning profits, and banks kept on selling their loans so they could give out new ones. But after all, every massive party ends up with a massive hangover. Eventually, subprime borrowers couldn't afford to pay back their loans. They started filing for bankruptcy. Everyone involved started panicking. In the next few months, America faced the biggest banking collapse since the Great Depression. If you didn't understand the crisis of subprime mortgages, that's alright. All you need to know from this story is that all of this was the outcome of the massive bubble investment bankers had created with their irresponsible trading. And when that huge bubble burst, the American economy suffered. So at this point, you're probably convinced that investment banks are evil and we're better off without them, right? But that's where you're wrong. Investment banks have helped in shaping America over the years. The first railroad mines and IT companies would have never come into existence if it wasn't for investment banks. So, what about the chaos it caused in 2008? Well, the market is volatile. It has crashed before and will undoubtedly crash again. In 2008, subprime mortgage crisis is just one of the many crises that took place throughout history. Today, the world aims towards an environmentally sustainable future, and it won't be easy without investment banks. They're the ones who will help us shape the world. So, what does the future hold for investment banking? Many believe crowdfunding platforms like Kickstarter will take over as preferred platforms for funding innovation projects. But chances are low, almost none. While these platforms might help fund small projects, they're not reliable enough to support big projects like the renewable energy revolution, which is desperately needed right now. Investment banks have already started pouring billions of dollars into alternative energy projects, and in the future, we can expect investment banking to play a crucial role in funding every world-changing innovation. Companies will always look for big investors, and investors will always be looking for new opportunities. So, it's safe to say investment banking is here to stay.